Joining us right now to discuss this and more, Jay Clayton, a former SEC chairman and CNBC contributor. And I think both of us, along with Becky, were scratching our heads a little bit about what we're seeing in terms of what's really being approved and what's not really being approved and how this could even work.
Yeah. So there's two pieces.
Lay it out.
There's two pieces of approval for one of these types of products. There's the listing approval, which is what happened yesterday. And then there's the approval of the product itself, which is still pending. What's that is called the registration statement. That we need to find out. Let me say this. This product is eligible for listing, but it will not actually be trading until that registration statement is approved. So it's okay in theory? So it's a step. It's a step in the direction.
But does it mean it's inevitable?
I think it means it's inevitable. We went through this same process with the Bitcoin product,
right,
where almost all of the questions were decided. The question that was decided yesterday, to speak technically, is that the market is efficacious enough for this product to be listed on the exchange.
Okay, but let me ask you a question.
That was what was decided. But there are other questions out there.
Oh, well, let's talk about those questions. But as you know, Gary Gensler and the SEC went kicking and screaming to allow the Bitcoin ETF, and only did so because a judge effectively said you have to. This is different. So what is different this time?
What is different this time is there was a settled issue of whether the underlier, Bitcoin, here the underlier is Ethereum, was a security or not, or transactions in Bitcoin were securities transactions. The SEC has not definitively said, up till now, and they still haven't definitively said, that underlying transactions in Ethereum are not securities transactions.
Is part of this because of what Congress just did this week to pass this first crypto bill and basically say it's going to be the CFTC that is overseeing all of this? Is this them putting another chip on the table saying, wait a second, we want to claim our legal framework for this?
My view, and my view for a long time in this program, is that progress, development, whatever you want to call it in this space, was always going to be incremental. What did they do this week in Congress or over the last couple of weeks? They made more clarity around custody and the cost of providing custody services for digital assets because they weren't happy with the way the SEC had done it. Now with this bill, they're saying, look, we want a path for products like Ethereum, other digital assets, to be able to trade like securities. And whether they are classified as commodities or whether they're classified as securities, we, Congress, want to see that path. And that's what you're seeing playing out.
Would you allow this yourself? You didn't when you were the head of the SEC.
Right. The question that was a problem for me, and I've said this many times before, was the market efficacious enough? Was that spot market for Bitcoin, spot market for Ethereum? And it's developed, remarkably over time, where people are very confident that trading is, So
you think you might have been able to get your head around it?
I mean, if
you were in the position today.
Yeah, I can get my head around it, and I'm interested to see what the conditions will be for the Ethereum exchange-traded product when it actually gets there. What is it that you have to show to prove that Ethereum is not a security, or if it is a security, how it works?
But part of the thing, and we used to talk about it, we used to use this analogy about Broadway tickets.
Yep.
You remember?
Yeah.
You want to tell the audience about Broadway tickets? Because I don't know if that piece of it's changed at all.
All right. Well, this is how you tell the difference between something that is a security and then becomes a commodity. Picture a play.
Yep.
Play hasn't started. I come to you guys and I say, you know what? I'm going to put this on. I'm going to get a great composer. I'm going to get a great producer, great actor. I'm going to get a venue. Tell you what, give me your money and I'll give you tickets for that play when it's on.
Right.
You're making an investment. You're buying a security. Those tickets represent a security transaction. You're hoping that my efforts deliver a great return to you. 6 years later, the play is a huge success. Somebody walks up to the box office, buys the same ticket to the same show. That's just a ticket. It's a commodity. It's not an investment in the future of the show. That's how something that is used to build out a network, using a token to build out a network and say, if this network gets built out, your token's going to be worth a lot of money, is a security. And then when the network's built out, the token is just for use on the network.